Hi, this is Cayden from VIA Value Investing Academy. Thanks for joining our, I think, third or fourth deep dive series. And we're going to talk about two very interesting companies that you have shared right during our last session, because I still remember during the last deep dive session under the YouTube chat, I was asking the audience, are there any companies that you're interested? And then you as in maybe a few of you, type in, right, this company called Palantir. Yeah, so tonight we're going to give you what you have asked for. So we're going to analyze Palantir. But before that, if you look at the screen right now, right, just need my team's help to do the projection on the screen. Hey, Alvin, hi. Yao, and then we have Woon Sin. In total, we have about 93 people. But the first person, right, who entered the empty YouTube room is this guy called Doom Shallot. Yeah, he must be a Palantir fan, right? You can see Palantir to the moon, super long. Okay, Alvin, good evening, good evening. Yeah, I don't know, are some of you in Singapore or somewhere else? But anyway, right now it's 7:30, right, Singapore time. So if you look at the screen over here, you are able to see a QR code. Now, if you want to follow our YouTube channel and be updated, right, with what are the things that we do, what you need to do is just scan the QR code and then just click the button subscribe. Yep. So I just need all of your help. And you can see on the screenshot over here, we have about 2.8K subscribers, right? So our goal is 1 million subscribers. I almost want to write a dollar sign, but 1 million subscribers. So we really have a long way. Okay. Come, please do me a favor, like scan the QR code. So good evening, right? Actually, this is quite interesting. The live one, I could see people responding. For example, I could see Alice Chu, Leon, Li Min, Jie Wei, Arthur. Okay, so good evening. Yeah, so the team, just to let you know that there are 4 people over here. One camera is facing me, the other camera facing Raina, right? And then we have 2 back-end talented people who are helping to manage all this. Okay, good. Have you all scanned already? Have you all subscribed? If you don't subscribe, I don't start, huh? Okay, Sadie, good evening. Kylie, what I see all our VAE graduate. All come in last minute. Yeah, just now there's no one, right? Right now 123. Okay, so let's get started. You scan already, huh? Now, let me share with you how this Palantir get into our radar, right? One of the reasons is because during our last deep dive session, as I was saying, people commented, hey, can you please do Palantir? Then another one is this Palantir become a very hot topic within the social media world. For example, I went to some very popular influencer site, right? And then there was this gentleman was saying, oh, I started buying Palantir at how long, how much, and so on. So he said, the world depends on Palantir. Wow, such a big thing, the world depends on Palantir. Now, then there's another site that I've been to, right? This gentleman was saying, oh, if you look at the latest quarterly report, the company is doing very well, the free cash flow become positive and so on. I'm very bullish about this stock. Wow, so I think in the social media world, everybody is saying good thing about Palantir, as though Palantir is going to change the world, right? But let's look at it from a more rationale, putting our emotions aside, and then let's see, is Palantir a company that all of you should explore and look at? Yep. Now, and of course, in the social media world, people always say, hey, this is a stock that I found, it's going to shoot up 20 times and so on. But is it really going to shoot up 20 times, huh? So tonight, we're going to cover this company called Palantir, and another company that we're going to look at is called SnowFlake. And the reason why we have chosen this company, right, is partly because Warren Buffett backed this SnowFlake, and also partly SnowFlake is a competitor of Palantir. So in other words, Palantir do not dominate the entire space, but they do have competitors. So what are we have Alicia, Susie, Joe, Lawrence, all this look like our VAE grads. So today's deep dive, as in, it's going to be about Palantir and SnowFlake. But before that, you already know I'm going to read this, right? But I'm going to read it very fast. So remember, there's a disclaimer, right, in case I share some detail. Now, the purpose of the case study, oh, by the way, this disclaimer is for both me and Raina. Okay, got it? So let's get started, right? So remember, the purpose of the 2 case study, which is Palantir and SnowFlake tonight, are solely to illustrate the application of value investing methodology, principles, in the context of real-life companies. Of course, the purpose is for continued learning of value investing method, investor education, and remember, right, no matter like how excited we are, right, remember, Under no circumstances does any of the following information provided in two of the case study tonight represent a recommendation to either buy, sell, or hold any stocks. So remember, whatever we shared tonight, it do not take into account the individual characteristic, profile, or risk appetite of any one of you. So remember, right, in no event shall VIA, any author, myself, Raina, be liable to any viewers, guests, or third party for any damages of any kind arising out of the use of any content shared here, including without limitation the use of all content, whether it's outside the intended purpose of investor education, investment losses, lost profit, lost opportunity, and a whole long list. So remember, neither my Kinesis Investments Private Limited, Value Investing Academy, nor the authors of tonight's case study are operated or affiliate with any broker, dealer, or licensed financial advisor. One last time, neither VA nor the authors makes any representation or warranty as to the completeness or accuracy of the information in tonight's case study. What lah? Okay, Angeline type snowflake, huh? Okay, let's get started, right? Let's talk about this company called Palantir. But before that, let's begin with an end in mind. So let me share with you what are the things that we're going to discuss about Palantir, right? So the first one is what exactly is Palantir doing? So we're going to go into the very specific. Second thing is how does it make money? Third one is who are the customers? They make money, they must make money from the customers, right? So who are their customers? And how does the business work? So this is pretty detailed, right? And of course, at the end of the day, even though it's a business, does it really make money? And how about their recent quarterly updates, followed by two sides of the coin, right? Whether is it something a pro, is it con, is it bullish, is it bearish, right? And of course, I shall end with the valuation, and I'll just give my personal thoughts. So these are the things that we're going to talk about. And now the question is, what exactly is Palantir? So initially, when I was preparing this slide, of course, most of the slides are prepared by Raina, right? So when I was amending this slide, I was thinking, how should I present this Palantir? Because it is a software company. Unlike companies like Sheng Siong, SIA, where they have a physical product, where you can see the plane, you can see all the stuff being sold in supermarket. So it's a software company. You can't really like see and then feel and so on. So what I'm going to do, right, is just to let you know that for this evening's presentation is going to be a bit special, because I'm going to show you two videos, because I think the videos that I'm going to show you later on, I think it shares a much clearer view, right, about what Palantir is doing, rather than me showing the slides. So just bear with me, right? The total there are two videos. The first video lasts about 10 minutes, but time will pass so fast, right, that you find the video is quite exciting. And I'm going to give credit to CNBC who produced this video. And the other video is about one of the product that Palantir is promoting. Okay, so one is from CNBC and one is from the Palantir itself. So let's look at this company. Now, if you look at this screenshot, you will see this guy called Alex Karp. So Alex Karp is the existing CEO of Palantir, and Dweezil say, is this really live? Yes, really live. Maybe you can type one mathematical equation, right, like 1 + 1, and then I'll type 2, so to show that it's live. Okay, it's not recorded. Okay, you can go ahead and type one question. Yeah, okay, got it? So let's get started, right? Let me make sure that I'm sharing with the sound and all this. Okay, I'm going to share, right? So I just need a team to check whether it's okay. So I'm going to click, ready? Okay, in case it's a bit lag, internet and so on. Mine is a landline, so it should be okay. So here it goes, Let me just adjust the volume. Yeah. The streaming comes from YouTube, right? YouTube,
After 17 years on the private market, data analytics company Palantir is ready to make its public market debut.
Co-founded by Peter Thiel back in 2003, its mission, providing software that customers use to integrate volumes of data from images to spreadsheets into a central platform where it can then be securely analyzed and interpreted.
News of Palantir's plans to go public, as well as its recent announcement that it will be relocating its headquarters from Palo Alto to Denver, has put the secretive software company in the spotlight. Best known for its work with U.S. government agencies like the CIA, the Department of Defense, and most controversially, Immigration and Customs Enforcement, the company was founded following 9/11 with the goal of defending American interests.
The core mission of our company always was to make the West, especially America, the strongest in the world for the sake of global peace and prosperity.
But in recent years, Palantir has also courted customers like Airbus, Chrysler, and BP. commercial customers now make up about 50% of the company's revenue, a number that's trended upwards over the past decade. And even though Palantir has never turned a profit, revenue has been growing as losses have narrowed.
Perfectly normal for a software company to show that sort of trajectory going into their IPO. The question is, does the economic model over time look like one that will eventually produce profits? And you can certainly get there.
But while longtime investors are eager for the company to go public, for others, confusion remains about what it is exactly that Palantir does, and why their work with law enforcement agencies
To do manually in very dangerous places.
The company's software has been credited with helping to find and kill Osama bin Laden, and though this has never been confirmed, Palantir certainly has not disputed it. The techs also helped to uncover Bernie Madoff's Ponzi scheme and rooted out Chinese spyware installed on the Dalai Lama's computer.
We work hand in hand with most of the special operators in the Western world. We work hand in hand with most of the clandestine services. We're in over 40 countries.
Today, the company increasingly works with high-profile commercial customers too. Its first was JP Morgan Chase, which adopted the software in 2009 to monitor employees who might go rogue. However, the partnership ended in scandal when JP Morgan's special operations lead used it to spy on top executives. Others have continued to express interest, though. Fiat Chrysler now uses Palantir to identify potential faults in car parts. Airbus uses it to respond more quickly to manufacturing problems, accelerating the production of its A350 aircraft. And BP uses it to analyze drilling data, reportedly leading to a 10% increase in oil production in the North Sea.
This is a hefty piece of software that runs across an enterprise and is used for understanding everything that a company faces, whether it's their customers, their supply chains, downtime, geographies where there's growth, where their competitors are gaining share.
As revenue from the commercial sector has increased over the years, CEO Alex Karp has had to rethink his historical dismissal of salespeople.
We don't look like a classic enterprise software company. We have no salespeople. Almost everyone here is an engineer.
Not anymore. Karp's been building out a sales team, and in 2019, the company spent 61% of its revenue on sales and marketing. However, long-standing government contracts remain integral to the company's revenue as well as its reputation. And during the coronavirus crisis, Palantir has formed a number of new partnerships too, with the VA, the National Institutes of Health, and Britain's National Health Service, helping these agencies, as well as the CDC, to track the spread of the virus and allocate resources.
In order to make decisions right now, in order to know where the PPEs need to go, in order to know when and where you're going to reopen, you want all the analytical models, all the pieces of information all in one place. Palantir is really designed to thrive in a crisis.
But especially under the Trump administration, the company's work with ICE and police departments has raised considerable concern in the liberal-leaning Silicon Valley, leading Palantir to double down on its commitment to law enforcement and national defense.
So I do think this idea of nationalism and libertarianism is kind of intersecting in a very interesting way, and Palantir seems to represent all of that.
Protests against Palantir first gained traction in 2018, primarily in response to the company's contracts with Immigration and Customs Enforcement, which are worth up to $92 million. The agency has cracked down on illegal immigration through workplace raids and separating families at the border.
My house has been protested for many months, almost every day. Our offices have been protested. Many Palantirians protested against it internally. Some people were so upset by it that they left. These are very hard decisions.
Co-founder and board member Peter Thiel is probably President Trump's most famous Silicon Valley backer, donating $1.25 million to his 2016 campaign. Karp's politics differ, but he says that Palantir remains fully committed to aiding the U.S. government.
I've never stopped being critical of this administration. I'm not planning to vote for this administration. So there are things I do differently. The core issue, though, is who decides. The small island in Silicon Valley that would love to decide what you eat, how you eat, and monetize all your data should not decide who lives under a country and on what conditions. There are elections, there are rules, they should be enforced.
Karp's ethos also holds true for Palantir's work with police departments from New York City to Los Angeles, New Orleans, and Chicago, who have used the tech for surveillance of criminal suspects and predictive policing, a tactic that civil liberties groups say leads to over-policing of minority neighborhoods. But can Palantir really claim to be above the political fray?
I understand the desire to be neutral and to kind of say, hey, we're going to play by the rules. That is a logically coherent stance if companies are also neutral with regard to who makes the laws. But hold on, if you're willing to back political factions with your own money, you can't say, well, in this aspect of our business, we do influence policy and politics, but over here, we are politically neutral. It doesn't work that way.
Other tech companies, like Google, have backed out of controversial contracts with the Defense Department, but Palantir sees that as an abdication of responsibility.
Peter and I built a very patriotic company. Google's clearly not a patriotic company.
Karp also hit back against the culture of the Valley in the company's S-1 filing to go public.
Here's what he had to say. The engineering elite of Silicon Valley may know more than most about building software, but they do not know more about how society should be organized or what justice requires. Our company was founded in Silicon Valley, but we seem to share fewer and fewer of the technology sector's values and commitments.
In August, the company announced it will move its headquarters to Denver, Colorado, likely both a financially and morally motivated decision.
The Valley is basically sold its soul to an advertising model where it's okay to sell your data, but it's not okay to support the country. And they didn't want to be part of that ecosystem and didn't feel that that ecosystem was aligned with their values.
So what does all this controversy mean for investors? For those who believe in Palantir's mission, it could be an asset. And for those with qualms, well, it ultimately may not mean much.
The general belief around the Valley is that public market investors in particular talk a big game about governance and about things that they view as acceptable and unacceptable, and then they buy the stock anyway.
Though Palantir is yet to turn a profit, this isn't of considerable concern to investors, who are used to betting big on tech companies operating at a loss. What will affect the company's value is whether investors view it more as a high-growth tech company or a lower-margin consulting firm.
That combination makes this a bit of a Rubik's Cube for investors because it's not a pure play software model.
For most of its history, Palantir has spent heavily on software customization services for both government agencies and large corporations.
It is a very costly business to run, but if they can automate their own processes and have a more efficient sales process and get the biggest customers to continue to buy more, then their operating metrics do improve over time.
As of late, that's what Palantir has been trying to do. And now it offers two fixed-fee platforms, Gotham for government clients and Foundry for the private sector. The company's target market is said to be the 6,000 companies that make $500 million or more in revenue.
The average customer spends over $5 million a year on Palantir's product. The top 20 customers account for roughly 2/3 of their revenue. They say they only have about 125 customers. So this is fundamentally different than your Zoom and your Slack. It is not for everyone.
In 2015, when Palantir raised its last funding round, the company's valuation was upwards of $20 billion. But lately, share prices have been all over the map, indicating a valuation range of anywhere from less than $10 billion to over $20 billion.
They're trying to show investors that they do have this really big market opportunity, that they have a bunch of potential customers out there, and that's where the skepticism is.
The true value will be clarified at the end of September when Palantir completes its direct listing, a process that is similar to an IPO, except that the company won't sell any new shares. It will just unleash those held by existing investors. Thus, the shares will be priced based on investor demand, and if the stock trades higher than expected, that value won't be handed to brand new shareholders.
I think the Palantir IPO is going to signal to venture investors and others that serving the Department of Defense and military business is going to be worthwhile.
Karp certainly hopes so, saying that the future of our nation depends on it.
The country with the most important AI, most powerful AI, will determine the rules. That country should be either us or a Western country.
Palantir doesn't do business with China, the US's main competitor when it comes to AI.
So if we bring our A game, we will win. If we bring our D+ game, because most people in the Valley live on an island where this seems like a questionable project, they will win.
Okay, good. So I'm just going to pause the video over here, right? Thanks to CNBC. And of course, I saw one comment as in like why are we watching a CNBC video? Yeah, but it's okay lah, huh? So I think initially what we wanted was we just wanted to, share slides and so on. But unfortunately, the slides alone may not be able to portray, right, how sophisticated a Palantir is. So that's why we showed the CNBC video. Yep, so that there is a flow. Okay, so this is what a Palantir is all about, but even if you watch the video and you have no idea what Palantir is all about, I think it's understandable, because for the video, I think I watched 5 times in order for me to understand what Palantir is all about. But let me just summarize and make it as simple as possible, right? Because this is unlike any companies like Sheng Siong, Kroger, supermarket, when the moment you mention, you understand. Now, very quick, this is like a summary of the video, right? Now, the key thing is, I'm going to go really slow over here because only when you fully understood what Palantir does for a living, then it makes sense for you. So remember, Palantir is a software company. So for example, Microsoft is a software company. So Palantir is a software company, but their focus of this software, right, is to use to analyze data. Okay? Software company used to analyze data. So if you string these three words together, right, it sounds quite complex. It's a data analytics software company. So remember, they produce software to analyze data. Now, so if I could use a very simple example, let's say my company has been around for 13 years, and then during these 13 years, sometimes we promote our training, our educational products, and so on. And then every time when customer buy, there's a transaction. When customers cross-buy any other product, there's transaction. So you can see a lot of all this information about buying, what products, who they are, where they stay. There's plenty of data. But for small companies like mine, we cannot afford to engage Palantir's help. But let's assume that my company is very big. I've got a huge amount of data about customer and so on. So let's say I have one objective. My objective is how can I promote any other products that I have, right, to my customer. Now, but unfortunately, there's so many data lying around. So I may choose to engage Palantir, where they will come in, understand our problem, what are the things we want to achieve, and then what they will do is they will customize, they will build a software that's customized for us, and then analyze all the data of our customers that we have, so that me as a customer, I fully understood what are the customers, consumers' behavior, then I can promote the things that they like to them. Okay, that's on the commercial side of things. But that is just to illustrate that it's a software company, analyze, let's say, company's data so that it makes meaning out of it, right? And then the company can achieve certain whatever objective using the data analysis that they have provided by Palantir. Now, so the founders, there are quite a number of founders, but the popular one is the billionaire Peter Thiel, right? So this Peter Thiel is the co-founder of PayPal, and everybody will know this guy. His name is called Elon Musk. Interestingly, if you look at him during his early days, right, not much hair, huh? But after he become richer, the hair come out. Okay, this one got nothing to do with the case. So remember, one more time, they are software company, right? Software company, and then they build software for two target market. One is for the United States government, different authorities. Another one subsequently commercial enterprises. But later I'll share more detail, right? Okay, so there's this guy called Drizzle. I want to invest money in Palantir, but I'm still struggling to understand. So right now, you know what? It's a software company that analyze data, right? Now, interestingly, the name Palantir, like the video said, it comes from this word Palantiri, which is like a fortune teller magical ball, right, that's able to see the future. And later on, I'm going to share a video about one of their products, which is called Gotham, right? So what they do is this, remember, it's a software company. This software company builds in some artificial intelligence, AI, right, which allows the analysts to project certain behavior, for military purpose. And I'll share more later on. Now, so remember, they're able to project behavior, right? And such software is used for surveillance and so on, which is important for national security's defense. I'm not very sure Singapore, do we have, this kind of software, right, that we can do surveillance of our, whichever countries that the nation felt there is a threat, right, to us. So in short, software that analyze data, make the data meaningful so that the customer can achieve whatever objective that they have. So this is a broad scope, right? So now the question, how does it make money, right? And they have two primary products. One is called Gotham. Now, if you watch Batman, you will know that Batman hangs around in the Gotham City, right? Now, Gotham, again, is a software that analyzes the data, but Gotham focuses on the government for surveillance, intelligence, and so on. Okay, so I purposely put a Batman photo here at Gotham. It's quite easy to remember. So this is the first product. Now, the second product is called the Foundry. So it's quite easy. Gotham for government, Foundry for commercial. It's the same thing. It's just that it's two different target market, but the software, again, analyze data, make meaning out of it, so that it can serve their customer, regardless, depending on what is their purpose. Okay, so what I'm going to do again, so I have to pardon me, right, especially to John, right, I'm going to play a video about what this software is all about, because no matter how many slides that I can put up, you will not be able to replace the video. And if I ask you to watch the video right now, go to somewhere, then it's quite awkward, right? The presentation doesn't look so smooth. But don't worry, be rest assured that this video now is a bit much shorter. It's about 4-5 minutes. So this video is produced by Palantir itself, and one lady is talking about this software Gotham, right? And how does it help the militaries? And it's quite exciting. It looks like a movie and sounds like a movie, right? So let me share this again, right? I'm going to click. So ready? I just need the team to make sure that there's sound, right? Yeah. Okay, ready? 1, 2, and 3. Wait, maybe I just share one more time, right? Okay, share here. Okay, one more time. Good.
I'm Meredith, and I'm a deployment strategist at Palantir. During my time as an active duty Air Force officer, I saw firsthand how hard it is to navigate the fog of war. Over the past 20 years, we've been focused on the counterinsurgency fight. And all that time, our near-peer rivals have observed our actions, learned our capabilities, and grown bolder.
The South China Sea is heating
Vladimir
up.
Putin tells the U.S.
A North Korean nuclear attack could be
Tensions between the U.S. and Iran are at
near Taiwan as tensions escalate.
Now that the focus is shifting to great power competition, the real question is, can we deter the next great war? As a notional example, an escalation could start with something as simple as the Chinese military conducting a routine exercise in the South China Sea. To see the full picture and make tactical, operational, and strategic decisions, the U.S. and allied forces rely on Palantir. Monitoring the exercise, AI models running on satellite data detect an increased level of military activity. To the north, ship detection models identify an alarming buildup of fishing vessels surrounding a major Taiwanese port. An activity model detects that many of those ships are tied together, suggesting an ulterior motive and increasing the risk of a blockade. The U.S. maintains a national interest in free trade throughout the South China Sea. And as an island, only 90 miles off the coast of mainland China, Taiwan is especially reliant on freedom of navigation through international waters. This free trade is particularly critical given that Taiwan produces 80% of the world's semiconductors. The device you're watching this on today almost certainly relies on these parts. Any disruption could be disastrous. So as the team watches closely with partner nations, a new alert comes in from Japanese intelligence. The Chinese Luoyang destroyer has gone dark and isn't showing up on intelligence feeds. The ship had previously been docked in a southern naval base, but AI models detect that it's now missing. Gotham fuses data from multiple sources to project likely paths for the Luoyang. The most dangerous routes head east, towards both the military exercise and the mounting tensions outside the Taiwanese port. The analyst identifies a key fork to monitor between the routes. To collect more imagery, machine learning models built by academic and commercial partners run on data across all domains. The models determine that satellite coverage alone is not enough to find the ship. Based on what is capable and ready, the system recommends a few alternatives. The best option is an aircraft from Okinawa. Before finalizing the selection, analysts deploy the latest micromodels, trained to avoid incoming threats, identify military equipment, and detect military ships. The unmanned aircraft receives its mission and prepares for takeoff. Time is ticking, and they need to find the ship quickly. As the aircraft departs, video streams back to headquarters in real time. A ship identification model detects the dimensions, speed, and weapon system of the destroyer headed north. An analyst back in the operations center verifies the detection, which confirms the Luoyang is on the most dangerous path and is only a few hours away from the potential blockade. The commander is briefed on the fast-developing situation and examines several human and machine-generated courses of action that have been jointly tested and developed in past exercises and simulations. The first option involves sending reinforcements to a nearby base, which may take too long. The second option is to send a manned aircraft over the fishing vessels, which could introduce unnecessary risk. The third option is a freedom of navigation operation, which means positioning an American or allied ship closer to the developing situation. This option appears to have the highest probability of success with the lowest risk. Joint forces decide to task an American ship. Once the choice is selected, a task order is submitted, and the American ship quickly alters course. The team watches closely as the operation progresses, and as the American ship approaches, the fishing vessel blockade begins to disband, and the Liu Yang continues north without incident. While this example was notional, events like these happen more often than you realize, and one wrong move could put millions at risk. In these situations, Palantir Gotham provides those who protect our values with the technology to make decisions at speed, and in the process, makes the world a safer place.
Okay, sounds pretty exciting, right, for Gotham City, Gotham. Okay, but anyway, the video is just to illustrate this software about Gotham and what it does. So you can see no matter how many slides I produce, it's not going to be as good as this 5 minutes video. So I have no other choice but to play this video, right? So let me just go to the next slide again. So just remember, Palantir has 2 products. So in case somebody is asking you what Palantir does for a living, at least right now you know. Number 1 is a software company that analyze data. Okay, so it has 2 main software. One is called Gotham, which is to serve the government authorities, right? And the other one is Foundry, which is serve the commercial. But both serve the same purpose of analyzing data and then put it to good use. Yeah, put it to good use. Now, so a quick recap. Remember the purpose of either the Gotham or Foundry, right, is to get the massive amount of data. Let me just use a pen over here, right? Yeah, so that you can make something useful out of it. And then, of course, the user, which is the customer, either the government or the commercial company, can take the final analysis of data and then do something about it. Yep. Okay, so, and the best part, Mike, got sound? No sound. Today is a bit unfortunate, right? Some sound, no sound. Testing. Hey, by the way, anyone, are you able to hear? Okay. Now it's okay, right? Yeah, correct. So remember, because the software, just now if you look at the Gotham, right, look at software, there's some like window-based, I can click down, click here, all this. So in other words, I suppose the software are very user-friendly so that any people are laymen, right, they don't have to do any form of coding and so on. Yeah, so you can see the last sentence over here. Now, even if they have never written a line of code. Okay, very good. So loud and clear, right? So let's get started. Now, in short, a summary. A summary, look at the top sentence. Remember, it's a software company, that analyze a complicated data, right? So that eventually the customer can use the endpoint of the analysis to solve problem. Okay, 2 software. One is called Gotham, okay, which serves the government, right? The other one is called Foundry, which serves the commercial. Yeah. So remember, if you're a customer, whether you're government or commercial, right, remember, this is what you see, which is the Foundry and the Gotham. Now, the interesting thing is these 2 software, right, need to build on another backend software. So in other words, for the Palantir, right, their backend software is called Apollo. So front end, Gotham, Foundry, backend, Apollo. Okay, yeah, Apollo, right? So Palantir runs a system called Apollo, which is the backend, to deliver updates, right, to this. So you can see the backend system deliver information, right, to the software, which eventually the user, right, will be able to see. And of course, regardless of where they are deployed and so on, without disrupting a customer's operation. So Foundry, Gotham, front end, and then back end, Apollo. Okay, Apollo, right? Now, if you go to the Palantir website, I just find it's a bit difficult to maneuver, but this is a screenshot that I got from Palantir. So a quick recap, right? Remember, Foundry for commercial, Gotham for government, as well as the back end, right, for Apollo. And then here it allows you to click. And for you hardcore, right, if you want to know exactly what is it all about, you can click. There's a lot of things, I think the website is so full of information that I find it a bit hard to maneuver, right? Yeah. So who are the customer? Just now a quick recap. Remember, government is one of them. I think in total in the CNBC video, right, their target audience are 6 1,000 customers where their revenue is, I think, more than 500 million. Yeah, so in other words, they don't target like small fries like my company, but they target really a huge company. So in other words, their target audience is across 40 industries in more than 150 countries. Now, yeah, so like just now what I've said, their customers are large, 500 million revenue and above, right? And let me just jump straight and so on. Yeah, and then of course the commercially, for commercial customers, spans across different industries. Government, commercial. Now, so what is their business model? We know that their software, right, is Gotham, Palantir, Gotham, the foundry, and then backend is Apollo, right? So what is their business model? So in other words, in order for Palantir to acquire customers, there are 3 steps. First step, obviously, is to acquire, but it's not so simple, right? Because in order for them to customize the software, if you're IT trainer, you know you need to sit down, talk to the clients, get their user requirement and so on. So it's not easy. Even developing my website, I got a hard time. So not to talk about companies with $500 million in revenue. And this is the first stage. And bearing in mind the last sentence, the first stage, right, for Palantir is actually a money-losing process. So in other words, they do not make money from the first step because they're spending time. Yeah, the software hasn't even developed yet. So once they gather the requirement, right, then the other one is to develop the software. Okay, what's your problem? You understand the customer problem, right? Then I'm going to develop this software to address those problems. So remember, at this stage, it's still losing money. Lose. And it's only at the bottom when the software is being implemented, right? And then when they start to scale over the long run, that's when they make money. So the money comes here. Yep. So you realize that in case you watch some video about so much hype about Palantir, right? It's not so simple because you look at the detail, the first stage, second stage, losing money, and only the third stage is making money. Now, so this is the revenue mix. Since we are talking about Gotham for the government, so they make most money from the government. It's about 56%. And then the foundry, right, is about 44%. Okay, so this diagram said it all. Now, then if you talk about location, right, just now you talk about the product mix. If you talk about location, US forms the majority of the revenue source. But of course, I don't think you will ever find a slice where China is inside because remember the CEO was saying that very pro-US, right? They want to be the best, and if not, we want to, the power should rest on the Western world. Yep. So I think people seems to hate China. Yep. So this is in terms of the geographical mix. Now, so let's look at the most, how should I say, right? If you look at the top customers, how much money did Palantir squeeze out of the customers, and as the years go by, right, are they doing it better and better? So let me just share with you 2019 first. Now, in 2019, the average revenue per customer is about 5.6 million. Okay, the revenue for the top 20, right, is 24.8. So bear in mind that this is 2019. Then how about last year? Did they do better? Now, in 2020, right, the average revenue is 7.9. So you can see this 7.9 is higher than 5.6. So in other words, year to year, they appears to be doing better. And for the top 20 customers, right, it's also doing better. This 33 as compared to 24. But bearing in mind that here we are talking about revenue. We are not talking about profit. Yeah, so sometimes I hear entrepreneurs saying that revenue is a vanity, right? And profit is a sanity. Yeah, so remember this revenue, right? Yeah, so now the question is, we are going to look at the sanity part. Yeah, revenue, yeah, vanity. So does it really make money? But before I answer the question, right, in case like I say, talk about so much hype and so on, when I show you the actual figure, right, you think it very carefully, as in if you're putting your money into a company, do you want to put in a company that makes money, or do you want to put in a company that don't make money? Okay, so Lich was saying can change the pen color. Okay, I'll change, right? Hang on. Now, so let's look at the vanity part, which is the revenue, right? Now, the revenue is okay. For example, if you look at this number, overall, there's uptrend. So in terms of revenue, they are doing better. So one fundamental criteria. Now, the next one, is almost the same as the revenue, except that we talk about the government slice, right? It does improve. Yeah, so government's revenue, revenue that's being contributed by the government authorities, right? It's doing better, as well as the commercial. And because both slices are doing better, which is why the overall revenue is heading upwards over here, which is good. Now, let's look at this a bit detailed, right? Now, in case you're not how should I say, your background is not accounting like me, so don't worry, I go through a bit by bit, right? So let's talk about the vanity revenue. Revenue is simply means that when they sell a product, whatever money they collect upfront, or sometimes this revenue is also known as sales, right? So remember just now we said that if you look at this like tiny little histogram, right, the company is doing well with the numbers increasing. Okay, but if you look at this gross margin, so what is this gross margin, right? Gross margin is this gross profit, as a percentage of revenue, so gross margin. If you look at the gross margin, it's still pretty stable. Average is about, let's say, 70%. 70%. But the moment you look at the operating income over here, do you realize that it became negative? And not only it became negative, do you realize that it became worse? This number, it becomes very big, right? Remember, operating income, the loss, right, is double of this, you know. Which means that the expenses over here is quite high, right? Quite high. If you relate back to the three-step process where Palantir acquired a customer, remember, stage one, right, acquire, they lose money. Second one, the deployment also lose money. It's only the scaling part, then they make money. So this number, right, clearly aligns with the three-step process where the first two phases are really not making money. But if I carry on, you see, I think their number is going to get much worse. Now, just now we were revenue, right? And then we talk about gross margin, right? And then we talk about the expense, you know, here. So remember, the loss over here doubles of here, right? Let's look down the road. If you look down the list, they got more expenses over here, more expenses. And if you look at the pre-tax income, now pre-tax income, that means the profit, right, before tax. So you can see here, can you see? Yeah, it's getting worse, right? So again, here the loss over here is double of here, right? And let's go down all the way down to the final one. Now, net income is simply taking the revenue minus all the expenses, right? Whatever that's left, this is called the net income. So same thing, the losses has doubled. And bear in mind that this is 2020, 2020, right? And of course, if the loss is doubled, then the margin, no need to say, it will be just as bad. In short, this whole thing, right, the company is losing money since 2018, 2019, 2020, and the loss is getting worse. Okay, getting worse. And we look at other fundamentals such as the cash flow, right, that are being generated from the day-to-day operation. You realize that number is become more and more negative. This is the line over here. Now, in case you're wondering how come this one is flat, it's because they only IPO somewhere during this range, right? After the IPO, they only got 3 years of data. Also, you need to ignore all this, right, over here. So remember, cash flow become worse and worse. Free cash flow, same thing, become worse and worse. So what is free cash flow, right? Free cash flow is simply taking the cash flow from their day-to-day operation, and then they minus away a capital expenditure, or sometimes called capex. Capital expenditure, in simple terms, are the money that they use to buy assets that could last more than 12 months, such as like equipment and so on. So just now, if you look at the video by CNBC, you realize that the room look like some intelligence room like NASA, right, with a lot of equipment and so on. So it gets worse. It gets worse. Now, let's look at the current ratio and quick ratio, right? In case you're not a accounting trainer, maybe I just share something very simple. Now, the word current ratio, right, is equals to current assets divided by current liabilities. Assets are things that the company own. Liabilities are things that they owe. Current, that means less than 12 months. So for example, cash is current, inventory is current, account receivables are current. Now, in simple terms, now if it's 3.74, what does it mean, right? It simply means that for every dollar of short-term liability that a company has, fortunately, right, they have $3.74 of current assets to cover. So in other words, this one still look okay. So based on value investing philosophy, it's still considered a pass. So that's short term. But let's look at something that's beyond 12 months, which is the long-term debt, right? We usually look at this debt to equity ratio, and we want it to be less than 0.5. So if you see this number over here, 0.28, so it's still less than 5. So the debt is okay. It's okay. Quick ratio, the current ratio is also fine. So let's have more detail about you see, when a company has debt, they have to pay interest. So for example, right now I'm still paying the mortgage payment, all the interest of my HDB flat, right? So if you look at this, you may realize that their interest payment has increased, and it's not increased by a bit, it's increasing by, let me see, 3 times 4, right? It's about 400%, 4 times more. So this is not a very good sign, right? And then, of course, the lucky thing is still the debt. Oh, the debt is still low, right? Yeah, interest high, but debt is still low. So let me just summarize. I'm just going to put down some icons over here. Right? After this, if you want, you can take a photo. If not, it's okay because the YouTube live is going to be here. So revenue trend, actually revenue trend, there's a mistake. It should be a pass. Yeah, because the revenue is going up, right? Gross margin is still a pass. And then the moment this goes down the list, it's fail already. Yeah, because negative net income margin is fail, cash flow from operation is fail, quick ratio is pass, debt to equity is pass. Yeah. So I'm going to leave this thing over here if you really want to have a quick snapshot, right, of the performance of the company as of the past 3 years. Maybe I give you 5 seconds to take a quick snapshot of this. Yeah. So remember, all this data is based on 2018 to 2020. So let's look at 2021, which is the most recent quarter, right? Now, recent quarterly updates, same thing, their revenue is good. Yeah, all along their revenue is good. Year to year, 36% increase, so revenue is good. Yeah. Remember, government and commercial, right? And this entire revenue goes up because the commercial revenue has increased 37% year to year. Government increased 34% year to year. That's why overall, right, for the Gotham and Foundry, 36% year to year. So revenue is good. Remember this quarter, this is not the year or 3 years, this is a quarter, right? Now, then of course, if the revenue goes up, their customer should go up. So you can see here, right, they add on 34 more new customers, which is why the revenue goes up. And because of this, this is a fortunate thing. Because in 2020, all the cash flow was negative, which is why the bar is pointing downwards, right? So right now, can you see the bar is pointing upwards? Yeah, so in short, for the quarterly updates, revenue, yeah, quarter to quarter goes up. And fortunately, the cash flow, right, free cash flow goes up, yeah, from negative to positive. So that's a good sign, yeah. But let's look at the quarter and see whether we so-called this good sign, right, does it still make sense? Now, this one is quarter, the most recent quarter, right? This is the last quarter because right now it's November, so the closer will be September. So let's look at this quarter to quarter and you see, right? You see revenue good sign, right? Here goes up a bit, but remember revenue is a vanity, right? So gross margin stable, right? Stable, Now here you look at operating income, loss already. But the good sign is the loss has reduced, okay, reduced, Then you look at the income before tax, right? Same thing, still losses, but you look at the trend, I think the good news is it bleeding, but it's bleeding slower. And then of course, eventually you look at the net income, it's still bleeding, but it's bleeding slower. So in case you read news about quarterly revenue or you watch some YouTube video saying that, hey, you know, the revenue goes up, free cash flow goes up, but you must understand that the company is still bleeding, right? Except that it's bleeding lesser. So now the question is, do you want to sell house and put all your money to Palantir? Yeah. So let's look at the pros and cons, just the last few slides, right? Now, the pro, right, is remember they go into their customer, understand the user requirement, and build customized solution. And because of that, and then some of the data are quite sensitive. So once you become their customer, it's quite difficult for you to say, oh, I no longer want you to be my vendor, I want to look for somebody else. I think it's not so simple. So there is this stickiness. Once you use their service, you tend to want to continue to use it. But of course, on the other end of the sword, right, is you are passing sensitive data, right, to them. So now the question is, can you trust Palantir? Yeah, can you trust Palantir? And remember, a company are made out of humans. Yeah, they're not a company, but the company is made out of humans. So these are pros and cons, right? And the other side of the coin, right, another pro, right, is the good news is revenue is going up because customers is going up. And of course, the other one is their 3-step process or business model is really very time consuming. And first 2 stages are losing money. So this is a disadvantage. And of course, because it's highly customized, it's not Windows software or Microsoft Office where anyone can use. It's highly customized. So because of that, high expenses. Now, so I have like 2 more slides to go. Let me share with you something interesting, right? Remember, about 56% of the money is being made from the government. So, you know, why would the government want to give projects to Palantir and not to SnowFlake or anywhere else, right? Or Adobe or whatever, right? Now, I don't know whether do you know this lady who was the former Secretary of State called Condoleezza Rice. And this guy, Condoleezza Rice, I think most people would know, but this guy maybe you do not know. This guy's a former CIA agent, right, called George Tenet. But regardless of whatever their name, what happened is these two, right, these two are advisors to Palantir. Advisors. advisors. So this big shot are advisors. It's like I have a company, but my advisor is the ex-PM, Mr. Goh Chok Tong, let's say, advisor. Just a hypothetical example. Now, and if you look at this histogram is quite interesting. Now, this is a lobbying spending of Palantir. So which means that as the years go by, right, do you realize that Palantir spent more and more money on lobbying? Now, the bad word, if you want to use in replacement called lobbying, is corruption. In US, there is no corruption. In US, there's only lobbying. So next time when you give money to somebody, you say, oh, I'm lobbying him. Yeah, lobbying him. So you can see that's the reason why they're able to get government projects, right? So let's come to my last slide, which is the valuation. Now, some of you, to the moon, you want to buy the stock and so on. So ready, right? Valuation. Just to let you know that when I went to Guru Focus, when I want to check the valuation, Guru Focus say that there is no valuation because the company is losing money. Now, but Morningstar interesting, right? Yeah, this guy called Mark Cash, which is their senior equity analyst, they say that the intrinsic value right now for Palantir is $31. And of course, the last closing price is 20, right? 33% discount. Yeah, by the way, in case you want to take how should I say, right? You should take all this opinion with a pinch of salt, because usually equity analysts, right, do not buy the stock that they recommend. So you have to be very careful and don't just blindly believe, right? They say buy this, but they don't use their own money, or they just say only. Okay, so this $31, right? So I leave it to you whether you trust Morningstar. So let's play a game now. My last second slide, right? Now, will you invest in Palantir? Now, before you say yes or no, let me just share with you one concept that Charlie Munger, who is currently the Vice President of Berkshire Hathaway, right, said about, how do you make a decision whether to buy the stock or not? So he said, right, after you look through all the information of a company, right, you end up with 3 baskets. The first basket, right, is the company, is worth investing, right, provided it provides a low risk and high return. This is the most ideal basket. The second one, right, is sometimes is high return but high risk. And the last one, right, is high risk. Sorry, this one should be low return. I forgot to change. So I'm just going to get some response to you. So ladies and gentlemen, if you can choose one basket, right, what do you think about Palantir? Do you think Palantir is basket number 1, basket number 2, or basket number 3? Yeah, so I just need your help to just type in the answer. And then after that, let me see, right? I'll just share with you my take in 1 minute, and I'll hand over to Raina. Oh, yeah, okay. Yeah, so I know there's a delay, right, which is fine, right? Yeah, you just need to type like 1, 2, or 3. Yeah. Okay, which one do you think Palantir belongs to? Mainkate say number 2, Derek say number 2, Yulai say number 2, Flower Pot say number 1, Dr. Michael say number 2. So remember, these are thoughts. I have no comment whether is it right or wrong, because ultimately it's your money, right? Okay, very good. So it's quite transparent, As the check goes, you will know what the votes, right? So I let you decide, so it appears that most of the votes, right, falls under the second basket. Yeah. So if most of the votes, right, falls in the second basket, you ask yourself, is it a game that you want to play? But let me just share with you my personal thought in the next 30 seconds, right, my take. Now, if let's say I'm really fascinated by Palantir, and then I wanted to buy, right? So what are the conditions that needs to be fulfilled before me, I will buy. Okay, now, but before that, let me share with you my thoughts. My thought is basket number 2. As of now, I have not much interest in Palantir. I think it's too complex for me, right? I would rather invest in a supermarket stock, because whether the money comes from investing in supermarket or Palantir, right, the money smells the same. Yeah, exactly the same value. So I don't think I need to impress anyone by saying that I invested in Palantir. Now, but if I do, you need to satisfy the criteria, as in the Palantir really has to find ways to reduce these operating expenses, because even though the revenue grow, right, but the operating expenses is growing faster than revenue. Yeah, as such, the losses widen. So this is number 1. So it has to meet this criteria before I even think of want to invest in Palantir. Then the next one, if their loss widen, right, and then they start burning cash, then one day the cash may run out. So So what to do? Even though right now their debt is lower, if their losses widen, they may have no other choice but to take on debt. And remember, taking on debt incurs interest. Yeah, and of course, taking on debt, it can be taken as in you can raise money from debt, and you can also raise money from issuing shares, which again will dilute the shareholders' interest. So these are not so good signs. So in other words, the key thing is number one. What I want to see is number one, right? So I think as of now, I think Palantir is still too early for me. At my age, I think this type of game, I think is too dangerous for me. Yeah, I would prefer something that I'm very sure at night I can sleep comfortably. Even though it sounds quite sexy, it can be a boasting right? But I think Palantir is not for me, It's not for me, right? Sure, I shall hand over to you. But before that, we're going to do a transition, right, to Raina, which is our equity research a writer, and she's going to talk about Palantir's competitor, which is called SnowFlake. So my apologies, I take out a bit more time. So I'm going to hand over to Raina right now. Thank you, Raina.
Good evening, everyone. My name is Raina, and I'm here to talk about this software company called SnowFlake. So let's begin. So SnowFlake is a cloud data platform. It provides data warehouse as a service which is designed specifically for the cloud. It allows corporate users to store and analyze data using cloud-based hardware and software. And it was founded in 2012 by these four lovely people which are mentioned here. And it was publicly launched in 2014 after 2 years in stealth mode. What is stealth mode? It means that it was in a temporary state of secretiveness to avoid alerting the competition. So what is SnowFlake actually? What is the company? So it helps blue chip companies analyze and share data in the cloud. So it is essentially a data platform which was built specifically for the cloud. Almost a decade ago, the co-founders realized that the data warehouses that existed at that time were quite rigid, complex, and very expensive as well. This was because data warehouses were generally on the company's servers and hardwares, like physical devices, which was expensive. This was costly because the companies had to bear the cost of the hardware and configuration and other costs. And also scaling was very difficult and time consuming and of course expensive. So the team of these three people, which are in this picture on the right, they formed a team and they solved these problems and launched SnowFlake. So how is SnowFlake different? The main differentiating advantage for SnowFlake is that it separates computing from storage. This means that customers only need to pay for what they actually use. Also, customers can quickly readjust their virtual data warehouses in real time and easily share data across teams to avoid silos. And of course, there's scalability. It automatically scales both up and down to get the right balance of performance and cost. SnowFlake was built to function across clouds. Initially, it was only run on Amazon Web Services, but now it also runs on Microsoft Azure and Google Cloud Platform. Now, these companies are customers as well as competition for SnowFlake. So, as Cayden mentioned earlier, SnowFlake has inspired the value legend Warren Buffett to shift tradition and invest in an IPO prior to profitability. Berkshire Hathaway has refrained from participating in an IPO for almost 50 years, but they broke this tradition specifically for SnowFlake and invested almost $570 million into the company in a private placement. And the SnowFlake stock had the backing of Salesforce and Berkshire Hathaway, as mentioned earlier. And on listing day, the stock more than doubled, and it was also the biggest software IPO ever. Now let's talk about pricing. So SnowFlake has a very robust pricing format. Instead of using a subscription model like other SaaS companies, it uses the utilization or the consumption model. This means that users will be charged based on their actual consumption. So compute, so I said that it separates the compute and storage function. So compute is charged based on processing units, which Snowflake calls credits, and customers only pay for what they use. And storage is billed separately. This makes it flexible and not so complex for customers to use and understand, and they don't have to anticipate which subscription plan is best suitable for their upcoming needs. So on the chart on the left, you can see that the yellow line is the cost that the company would incur if they followed the traditional SaaS companies. And the blue line is the cost that the company will incur if they work with the Snowflake platform. And so this red arrow shows that during idle time, Snowflake does not actually charge anything. So users can choose to suspend a particular warehouse if there is no computing active, and then no charges will be incurred for that particular idle time. Now, the Snowflake platform can be used for various uses. So, for example, data warehouse or the data lake, or for data engineering, also for data science and data application development and data sharing. Now, competition in the tech industry is quite intense, and with the introduction of new technology and innovations, Snowflake faces competition from mainly three kinds of players: large established public cloud providers, for example, AWS, Microsoft Azure, or Google Cloud; less established public and private cloud companies; and other established vendors. But Snowflake also has some competitive advantages. It has managed to build a platform which has an architecture that is cloud focused. It can handle diverse data types in one location at scale. It offers multiple use cases in one platform, and many users can access the data simultaneously. And you can share and move data across public clouds, and it offers consistent user experience across multiple public cloud providers. There is also pricing transparency and price performance benefits, and it is quite elastic. You can scale up and down in high intensity use cases. Now, a little more about the business model of Snowflake. It generates a substantial majority of revenue from storage, compute, and data transfer resources. For storage, the fees are based on the average terabytes per month, and for compute, the fees are based on the type, duration, and the volume of the resources used. For data transfer resources, consumption fees are based on the terabytes of data transferred, the public cloud provider used, and the region of operation. Customers may either enter into agreements of 1 to 4 year terms, or they may use on-demand arrangements. Now, I will discuss a few key business metrics which an investor should look at, which are important for analyzing Snowflake. So, first is the product revenue. Snowflake recognizes revenue based on consumption basis, as mentioned earlier, and this depends on the customer's discretion. So, the amount of product revenue recognized in a given period is an important indicator of customer satisfaction and the value derived from the platform. So, as shown here, we can see that product revenue has increased over the years, and although the percentage has fallen, it has increased 120% in 2021, which is quite a high growth rate. And then the next metric is the remaining performance obligation, or the RPO. This represents the amount of future revenue that has been contracted with the customers but not yet recognized officially as revenue. So we can see here that the company has a robust RPO as well. It has risen more than 200% in 2021 and to $1.3 billion. The next metric is the total customers. This is quite obvious. This represents the total number of customers at the end of the period, and it is an important indicator of growth of the business and, of course, future revenue trends. So the total customers has increased by 73% in 2021 to reach 4,139 customers. The next metric we are going to talk about is the net revenue retention rate, or the NRRR. A high net revenue retention rate suggests that Snowflake's customers are using the platform more. So we can see here that the net revenue retention rate for 2021 is 168%, which is quite high, and which means that the customers are happy by using the platform. And then the last metric is the customers with trailing 12-month product revenue greater than $1 million. Now, large customer relationships lead to scale and operating leverage. Compared with smaller customers, large customers present a greater opportunity for the company to sell additional capacity because they have larger budgets, they have a wider range of potential use cases, and a greater potential for migrating new workloads to the platform. So we can see that the number of customers contributing more than $1 million in trailing 12-month product revenue increased from 41 customers in 2020 to 77 customers in 2021. Now let's talk about the revenue. So the revenue here, we can see that it is growing, and it has grown by 174% in 2020 and by 124% in 2021, which is a good sign. Now, Snowflake derives more than 90% of its revenues from its product, and the remaining comes from professional services and others, which has negative gross margins, although the margins are improving a little. Now, this table shows the percentage of revenue data, that is, all the line items on the left-hand side represent what that item is as a percentage of revenue. So we can see that costs, the direct cost that the company incurred was 54% of the total revenue in 2019, which fell to 41% of the revenue in 2021. So we can see that the costs as a percentage of revenue have been falling. So this in turn translated to gross profit, which increased. So we can see that in 2019, the gross profit as a percentage of revenue was 46%, which increased to 59% of revenue in 2021. So this is a good sign. But the sales and marketing, now the company spends a heavy portion of its revenue on sales and marketing. So we can see that in 2019, they were spending 130% of revenue on sales and marketing, which has dropped in 2021 to 81%, but it's still a big chunk. So as a result, we can see that the operating loss and the net losses are quite high for the company. Now let's talk about the gross profit. The company's gross profit has been increasing, and but we can see that the gross margin has improved a little bit from 56% to 59% in 2021. But the company is loss making, and the losses moreover have been increasing over the years. So this is a weak sign for the company. Same with the net loss, and the EPS is seen increasing a little because they probably the IPO occurred somewhere in 2020, so that is why the number of shares must have increased, which is why the loss per share must have fallen. Now the free cash flow. Despite having good fundamentals in the sense that good customer growth and strong retention revenue and good revenue growth, Snowflake still has negative free cash flows. Cash flows improved in 2021 along with the cash flow margins, which improved from -75% to -12% in 2021. In fact, the adjusted free cash flows have turned positive at $17 million for the fourth quarter of 21, and for the first 2 quarters of 2022, the adjusted FCF was approximately $26 million with a margin of 5%. So going forward, strong customer retention should help the company in generating internal revenue and leading to healthy cash flows. Now let's discuss the key risks which the company faces. So the company needs to stay abreast of latest developments in technology and constantly innovate in order to stay relevant in the face of the intense competition which exists in the tech world. The company has a limiting operating history which makes forecasts difficult, and gives limited visibility into the future results, especially with a history of operating losses. Snowflake runs the risk of harm to its reputation if there is any data breach on its platform. The slowing businesses of clients due to the pandemic may affect the business of Snowflake. Remote work by employees may lead to lesser productivity, and the company may also have to keep incurring certain fixed costs, which may lead to a little or no benefit in costs. Now, I've already mentioned this, that the sales and marketing, the company shells a lot of money into sales and marketing, but this is true for any tech company in its early stages. But this could make it hard to reach profitability going forward. Now, there is a lack of hybrid platform. Snowflake is cloud native and it does not provide hybrid or on-premises platforms. So this can limit the customer pool if clients prefer a hybrid. And the last risk that I would like to discuss is that public cloud providers have competing databases, but they pose the risk of pricing pressure over time. Tech giants like Google Cloud, AWS and Azure can vastly undercut Snowflake on pricing, leading to issues with margins for Snowflake going forward. Now, Snowflake has a market cap of $119 billion and a price to sales ratio of approximately 140. The company is growing rapidly and the total addressable market for the company is huge, approximately $90 billion as per company estimates, which points to a sizable market opportunity for the cloud data platform of Snowflake. Now, as companies look to transition their legacy on-premise databases to the cloud, that coupled with the strong net revenue retention ratio that we talked about earlier should be expected to drive sales substantially for the company. So here are some concluding points for Snowflake. Despite the sky-high price to sales ratio, Snowflake is operating in a hyper-growth cloud industry. The company has disrupted the data warehousing market with a superior cloud data platform that delivers across key differentiators. It has displayed strong revenue generation along with strong net retention rate. However, this rate may slow over time as customers become difficult to retain for the long term. There is a huge potential due to the future of cloud, but another thing to be careful of is the competition from giants like Amazon, Google and Microsoft, who are offering their own data warehousing solutions atop their respective public clouds, which Snowflake uses, by the way, right now. However, Snowflake's platform is flexible to operate with and operate with any cloud operator, and it is quite adaptable as well. And another plus point for Snowflake is that the business, it is consumption model based business model. So it should further drive preference among customers. So once the bottom line starts turning green, the stock may re-rate itself, but we will have to wait and watch. Thank you.
Okay, thanks Raina for sharing the analysis of Snowflake. So before I continue, it appears that the Palantir and Snowflake both are in fact losing money, right? So, you know, for the past 1-2 years, it's quite interesting. It reminded me of those early days during the .com. So I'm already 50. .com is in 2001, so I would have been in my 30s. So I remember very clearly that people are dumping their money right into companies that they are not making money. Yeah, but I think the difference between in the early days .com and the current days unicorn company or high-tech company, right, is in the early days, I remember that those .com companies don't really have a revenue model. So in other words, they have no revenue, they have none. You don't see revenue going up, and you don't see like in the future it's going to be a bright or whatsoever. So that was the .com. And then right now things has bit changed. To me, it's still quite a bit of hype. The only difference is I see, like for example, for Palantir and Snowflake, they have increasing revenue. And how should I say? To me, it's the second basket. If you want to play this game, it's really a high risk, high return game. Yeah, whether do you want to bet your money into companies that has not yet turned a profit, but they are bleeding, but they're bleeding lesser and lesser, and your bet is one day the bleeding stop, and then suddenly they start to grow money. Yeah, so now the question you have to ask yourself is, do you want to play this game? So it's either a yes or a no. Now, but obviously, I just need your help to share the screen. Yeah. So if your answer is no, then it's no lah. So you don't buy any of the company. But if your answer is yes, right? If your answer is yes, then the next question is, how much money, right, do you want to put in? Yeah. Remember, most of you say it's a high risk, high return, right? So in other words, if this circle represents 100% of your capital, and you're interested in any of this company, whether is it Palantir or whether is it SnowFlake, right? You have to think very, very carefully if you put your money inside, since it's a high risk, high return, right? Like, what kind of percentage do you want to shove your money in? What, 10%, 20%, 30%, 40%, 50%, less than 5%? This really, how should I say, there's no right or wrong. It varies from individual to individual. Yeah. Now, so coming back to here, right? So that is the asset allocation part. But of course, Morningstar, interestingly, they can evaluate anything. So here it says that the last close as of this afternoon is 343, and then right now the intrinsic value is 295. So if I put these two companies side by side based on Morningstar's analysis, from their perspective, right, Palantir appears to be undervalued, and then for SnowFlake is overvalued. But of course, Buffett didn't buy Palantir, right? Or rather, Berkshire didn't buy Palantir, but Berkshire invested in SnowFlake. Now, and then there's one more thing to take note. Remember when Berkshire invested in SnowFlake, right? There are a couple of figures inside Berkshire that may buy SnowFlake. Yeah, because SnowFlake is a tech company, right? So you ask yourself, is it Buffett, is it Charlie Munger, or is it their two successor, which is TopCom and TechRational? I suspect it could be their successor, because the amount of money they put in SnowFlake is quite little. Yeah, it may not be a Buffett decision. Okay, so with that, this valuation, right? If you want, you can take a screenshot of this. With that, we are going to end this evening's deep dive session into Palantir and SnowFlake. But hang on there, we're still not at the end, right? Because I just need your help. Again, this is the QR code. I just need your help to just scan this QR code and then subscribe to our channel, right? And then there's one more thing. Now, in case there are any other companies that you want us to talk about, of course, Palantir is done, SnowFlake is done, right? And I want to talk about exciting things. You know, the other side of me, value investor, side of me, I'm looking at, safe company, Buffett type company. But another side, right? Since all of you like exciting things, maybe I give you maybe 1-2 minutes. Can you just type on the YouTube chat, right? What other companies do you want us to do in our next deep dive session, right? Yeah. But at the same time, and then you scan the QR code. Scan the QR code, okay. Yeah. So I think there's some lag time, but it's okay. You can type any companies you want to talk about. US company, Singapore company. Usually Singapore company a bit boring, right? Yeah. So I'm going to end this evening session with just my last slide, and then all of you, if you are our graduates, you will know that we are VIA Value Investing Academy, and our mission has never changed. Is we care to make you a better investor, and a series like this, a deep dive series, is really, how should I say, requires quite a amount of preparation. And of course, our objective is to make sure that you don't lose money, and then you will do well in your investing journey. So again, at VIA, we care to make you a investor. So I shall see you soon, right? Our video will still be around maybe for the next couple of minutes, so that you can type in some of the companies that you want us to look into. Wow, there's already quite a few, right? Wow, BNTX, Lemonade. Oh, never heard this before. Wow, very good, huh? Wow, you're typing all the companies that I've never heard before, right? Okay, good. Keep coming, right? Keep coming. Okay, got it. Well, Lucid seems to be, I got 2 votes, right? Okay, Lucid. Sounds like some terms that relate to dreams. Lucid dreams. Okay, good. So keep coming. So I shall end this session, but keep on posting your choice, right? And out of your list, we'll definitely choose one at least. If we can, we choose 2. Okay, got it? Okay, so all of you have a good evening, right? And then if you are our graduates, I shall see you in our next gathering And of course, I think end of the month, right, we have a one case analysis together with Cheryl, right? Okay, so I shall see you soon. So again, at VIA, we care to make you a better investor. Okay, goodbye.